while I'm trapped in this room that I'm in to talk to you about property taxes. More specifically, how you should go about researching to understand what the property taxes should be or could be on a potential home that you're looking to buy. So that's the purpose of the live. So I'm going to just take my time. If you have any questions, um, feel free to put them in, and we'll make sure we either get you an answer now or later. That being said, let's get into it. So now, escrow accounts have been all the buzz for people that have recently purchased a home, and the reason is that the taxes, the tax portion of the escrow account across the country has caused the total monthly payment to increase due to property taxes and things of that nature um, going up. And so, if you're looking to purchase a home, this is something that should be in the forefront of your mind. And it also can be something that is scary because most people want to have an assurity about what their monthly obligations are. And so, the first place I think you should start is with your county, township, or parish, wherever you're looking to buy, and find out what the millage rate is on said taxes for the property that you're looking to buy. And so you just simply type in whatever the county is where the house is at, tax assessor collector, and you should be able to get a good idea for the millage rates that will be applicable with said property. Now, if it's a new construction, a new home, you may not be able to drill down to that particular house, but if you're not dealing with a professional or something of that nature, you can look at the properties that are in close proximity. It's not really hard to do. Google Earth is a great tool to use to kind of get addresses along those lines if you're in that type of situation, so that you can get a good grasp. Now, here is the where the rubber meets the road. Um, Taxes are going to go up, and if you cannot grasp that concept, meaning if you're buying a home and you need your payment to be $1,200 a month and not increase, well, then I think you need to take a pause, a step back, and really look at your income situation because of the environment that we're in, and then for the foreseeable future, taxes will be on the rise. This war situation that's going on, if you think about it, um, I've heard anywhere between 15,000 bombs to 20,000 bombs, whatever you're listening to, but those things have to be replenished, meaning there's going to be more taxes coming down the line. And so now is the time to determine if your income is in a position to have the ability to keep up minimum 3% a year as far as inflation is concerned. And if you can't comfortably uh, foresee that happening, the only way to mitigate those things is to potentially buy in different markets that don't have high property tax rates. But no, even with that said, you have to have that understanding and that mindset that taxes go up over time. And so this is why we like assets such as residential real estate. That's why I like it, not for an investment purpose, but because it's pegged with inflation. And so this is why a lot of homes that you may not think are worth what they're worth are, and it's not because the house is more valuable, it's because it takes more dollars to buy that house because of inflation. And so back to the property taxes. You want to go to the tax assessor collector's office. of the county, parish, or township, and either find the home that you're looking at and figure out what the most recent tax bill has been on said home, and see if that's something that you're comfortable with. Now, regardless if it's a new construction or a pre-existing home, better if it's pre-existing because you could get a better idea of what the taxes might be. But the next thing you want to do, let's go pre-existing, is that you want to make sure that whatever exemptions are associated with that home, that you will be able to qualify for said exemptions. Let me explain. Homestead exemptions are something, if offered, should be applicable to everyone that is going to buy a home and is going to be your primary residence. Okay, that's one that's across the board. But I deal a lot with veterans, and a lot of the veterans that buy homes have 100% disability, and in certain states, they don't have to pay property taxes. Well, if you're buying a pre existing home from one of those sellers, a veteran that has 100% disability, you might look at a $600,000 house and think, wow, man, the taxes, or there's, the taxes, well, bad example. I won't use 100% exempt. Let's say that their taxes are taxed at 80% of what you would normally pay because you don't have an 80% disability rating with the VA. That's a better example. And so when you look at that $600,000 house and the taxes or whatever the purchase price of the home is, uh, you might think, hey, I can swing this payment. This is right in my wheelhouse, and I can't believe how low the total payment will be when I look at the principal and interest, taxes, and insurance. And the reason being is because there's an exemption there that will not be applicable to you. So after you find the assessor collector and the house, if it's pre-existing, then you want to drill down and look at the exemptions that are associated with said home. Now, depending where you are in this country, and we live pretty much nationwide, um, different counties, townships, parishes have different rules as to what information they divulge publicly. And so, if you run into a situation where you can't see the exemptions, well, this is where you might have to lean on a professional realtor, or maybe even go down to the county. If you want to do that, you can do so, and do a little more digging. There's some I won't call them tricks to the trades, but there's ways for me as a professional to get this information. But my point is, you want to make sure you ask those questions. So, uh, is this tax estimate based on exemptions that are applicable to me? Anything outside of a homestead exemption for those that are going to be living in the house as a primary residence, everything else you need to double check. One that comes up a lot, not only just as the example that I stated with the veteran with a discounted tax rate, but you might be buying a home from an elderly person that has some additional tax breaks on the taxes due to their age, right? So this is a gotcha type moment, and in my opinion, is why you really go through the process of being properly pre-approved, properly submitting all your documentation, going through the steps, and not just a quick my credit looks good and everything looks good and I'm pre-approved. Don't do that to yourself because there's a lot of nuance, as you can see. And other than the principal and interest portion of the payment, the taxes, well, heck, taxes and insurance nowadays are something that you have to understand, not just at the time of purchase, but you have to be savvy enough and work with a team savvy enough to project, if you will, what those future payments will be. Because on all fixed rate mortgage payments, taxes and insurance, the escrow portion can increase. Now, I'm gonna take a pause because I'm live, and as you can't, if you can't tell, I'm doing this vertically. I'm remote in a remote situation, so if you hear any background noise, I apologize. Any nope, we don't want a green screen. Sorry about that, guys. Let's take that off of there. Take that off. Yeah, we want to do that. But where would I see? Are there any comments? I don't know if anybody's any on. No, that's a question or poll. We don't want to do that. Let me see what this one is. We don't want any effects. So we'll take that off of there. And let's see here. I guess we don't have any questions, eh? Yeah, let me just check one other thing and then we'll back into um, what we doing. Okay, let's take that off. So now, once you've done those things, right? Restate. What things? Gone to the assessors, or the assessor collector to find out what the actual tax bill was recently on the home that you're looking to buy for pre-existing. New home construction might be a little different. You should be able to deal with, if you're dealing with a builder, you should be able to deal with a sales center that gives you an idea of what an overall tax rate would be. But here's the next thing where a lot of people misunderstand and not correctly what the taxes may look like. And so if I were buying a house today, again, I want to know, you might be different, but I'll explain why I want to know the worst case scenario. Then I'll give you an example of how to calculate it. If in a worst case scenario, you can undo that monthly payment and have some wiggle room for any potential increases in the future, anything less than that is going to be Gucci, right? You're going to be very well prepared. But people are reaching, trying to get something that they really, really want, that taxes don't increase. Well, not trying to be a Debbie Downer, but I just dispelled that myth. There's too much money printing going on, too many things happening that say taxes are going to be higher in the future. Just because the cost of goods are going up, there's more people chasing fewer goods. It is what it is. And so this is why I have that mindset. I'm not telling you what to do. I'm telling you what I would do. So from there, you can do one or two things. What you see online a lot is people take anywhere between 0.5% to maybe 1.25%, 1.5% of the total purchase price, multiply it times total purchase price divided by 12. That will be your tax rate for said house. But I like going the opposite route. I like taking 20% away, or 80% of the sales price value, and then multiplying that times whatever the total millage rates. When I say millage rate, per million, when you look at a county, township, or parish, they'll have like school millage rates, uh, road millage rates. You might even have some colleges, or water districts. There's several different millages or authorities that tax you that make up the total tax rate. And so once you add all of those up, then you multiply that times what 80% of the purchase price is, and that'll give you an annual number. Divide that number by 12, and then that'll give you the monthly amount. And this is something that you guys can do when you're doing your research as to determine if you're ready to get onto the property ladder. The next video I do, I'm going to delve deeper into insurance, because as I said earlier, taxes and insurance now are something that you have to be cognizant of, not just at the point of sale, but as you live in the property. It's akin to buying a luxury vehicle, a foreign luxury vehicle, and not understanding that the maintenance is really where the rubber meets the road, and it's not the maintenance that you may have been used to with a lesser or domestic vehicle. And so the maintenance is what's getting a lot of folks. And maintenance in this context of this video is taxes, right? You have to have them. So now is the time to determine if you still want to buy because of the taxes. And if you do, the second thing that you have to decide is, do you want to buy in the area that you thought you wanted to live in? Because that is an affordability issue that you have to address. So hopefully that makes sense. There's one other thing I want to tackle when it comes to taxes, okay, for you to understand and hopefully implement, to help you better prepare yourself to get onto the housing ladder, because you guys know I am a home ownership advocate. I won't go deep into my situation now, but as I sit in the place that I sit today, uh, there's a there's a component to the situation that I'm dealing with now with a family member that has home ownership tied to it. And home ownership is a beautiful thing when done right. You don't have to buy a McMansion. You just need to buy something that you're going to live in and grow and nurture your most valuable resource, and that's you and your family. Okay? And at the end of the matter, it's always best to have options opposed to always kicking the can down the road to a point to where you may not be able to get onto the housing ladder if that's something you want to do, and then you're always beholden to a landlord or whatever is popping at that time. So if those things resonate with you, you are who I'm speaking to. If they don't resonate with you, you don't have to put a dissertation why in the comment section why buying isn't the best thing to do. This is not the video. I'm not talking to you. You need to find that channel respectfully. Now, as we round the corner and wrap this video up for today, when it pertains to taxes, here's the deal, man. Here's the deal. I think it's a great exercise for you to understand where your tax dollars are going when you pay them on your home. What do I mean by that? Most people that have children send them to school. Well, is the school district, or not is, but what is the school district doing with the monies that are collected from your taxes if you're a homeowner? And not to get into politics, because I'm not a real big politic guy. So in my opinion, it's a bunch of hot air. But locally, you need to know what's going on. So this also is a great tool, a great way for you to determine where you should buy. Okay, my dad used to tell me all the time, Robert, follow the money. So when you follow the money and you look at the school millage rate, which is going to be the highest taxing entity, not authority, but taxing entity in the taxing equation to come up with the total percentage, do some research. They're collecting all this money for what? Are they building new schools? Do you need new schools? Because see, when you understand these things, these are the things that increase your taxes from year to year. If you're moving in an area that was just raw land at one point in time, but that's where the growth is coming, well, think about it. More roads, more schools, police, fire, it's growing. Well, the chances of your taxes going up and to the right on an annual basis is going to be a lot higher because you're a part of that growth. You see, nothing is free. Nothing is free. I don't know where we got this mindset that, I'm going to live in $1 million house and have all these services and I don't pay nothing. So this is why on this channel, not only are we simplifying the home loan process, but we talking to adults. Now, with that said, we don't want to pay more than what we have to pay. And that's why I made that point. So when you look at the highest taxing entity, the schools, where's the school spending the money? Are we in a growth pattern? And if so, and I want a more stable increase, if any, or flatline, then that should help you determine where you're going to buy a home. You see, these are the tools that you use, and before you up. Hopefully, this short video has provided you with not only some insight, but the tools that you would need to help you make a better decision before you get on to the housing ladder. Now, if you would like to have a conversation and go deeper into your specific situation on how to do so, I believe teamwork makes the dream work, and having the right team matters. So, if you'd like to reach out to me, my contact information is pinned in the top comment and the description of this video. Let's have a conversation. 15 minutes. It's free. It's on me. I want to hear what it is that you're trying to accomplish, and let's see if we're a fit and we can partner together. For everyone else, my time is up, but I thank you for yours. Before we get out there, don't forget to watch the next video in the queue, because it's going to help you educate yourself so that you can be the best informed consumer when you make the largest purchasing decision that most people make in their adult life. Indeed. Y'all stay blessed.